Okay, real life traders, here we are. It is 3 o'clock in the afternoon. Let me go to a screen share here. Let's pull up. Just give me actually, let me do a little bit of housekeeping here. Let me get my chat out of the way here. What's going on, everyone? See who do we got here? We got Adam, we've got Martina, Win, all the usual suspects. We got Wes, beautiful. Joe, hey, give me a one real quick. Just show, let me know, make sure that you're looking at my my charts. Beautiful. Okay. All right. So I'm just going to elaborate a little bit more on what I was just talking about with Johnny in terms of this Amazon trade. Now, it's interesting. Like, again, I'm watching this as well. Like, I'm was thinking this might be something that I was interested in getting into. All right. But the big but there is, again, for me, and just my approach is that, oh, hang on a second, I've got something going on here. All right, I was actually restarting a program. I didn't realize it was going to flash on all my screens. The big but, got a big but that said, here's my deal. At this hour of the day, 3 o'clock, right? I'm trading off. I gotta rely on this 15-minute chart here, right? So again, my setup a little bit different, right? And Johnny's may work perfectly here. I don't know. We never know, right? We're just gonna have to wait and see. But for me, like my setup, again, his was a little bit more aggressive. I should say aggressive because he's just using a smaller time frame, right? It's not that it's more aggressive, it's just that it's going to happen quicker, right? The smaller time frame was showing something different than what I'm looking at on a 15-minute chart, right? So on my 15-minute chart, my entry has to be, I've got to be using this hammer for and I want to see a break of that hammer. Now, I want to also just elaborate a little bit more. Let me go to this chart here. The other thing I'm really liking about where Amazon is right now is, like, first of all, look at the size of this candle on the daily, right? I mean, it is just completely beat up, right? Big old bearish candle, big old bearish candle. Now, that doesn't mean it's got a bounce here, right? I mean, look at this one, right? Look at this one right here, right off the 50. Did it bounce? Nope, just closed right there. This jagged light blue line right here, I know is my weekly 100, right? So I've got on my Thinkorswim here, I've got my higher time frame moving averages that show up on my lower time frame. So on my daily chart, I've got the weekly moving averages showing up here as the jagged line. So right here is the weekly 200. Here's the weekly 100, right? So I like the fact that we're sitting right down here on this weekly 100, right? Great place for it to bounce. But again, for me, I need to, like, here's this 3-minute chart, right? And right, so if I look at this 3-minute chart on this hammer, right? And again, granted, it's a hammer. We can all see that, right? But I need to go into especially this hour of the day, right? We got 45 minutes left in the market. And quite frankly, this is one of those things where it's got to be a judgment call whether you want to take a trade this late in the day, because again, with only 45 minutes to go, we're looking at a bullish move, right? Bullish moves don't happen as fast as bearish moves, right? You take the yeah. Sorry, I thought somebody was posting something in the Slack and chat. So anyway, the bearish moves move much quicker than the bullish moves, right? So what's that saying? You take the stairs up, elevator down, something to that effect. Or stairs up, you jump out the window. I don't know. But the point is that at this hour of the day, I also have to be thinking about, okay, if I'm looking for a bullish move, do I have enough time for this to happen, right? So, and again, it has to come down to you and your individual trading plan. And for me, it's kind of a judgment call right now. Now, the other thing I need to touch on, okay? So first of all, here's the 3-minute chart. This is what, Johnny was looking at, this hammer, right? Which, yeah, nice looking hammer, beautiful hammer. Way that you could, now, if you wanted, again, for me, I need to play it on a higher time frame this late in the day. But the way you could play this is to, this wasn't the strongest close above that hammer. So if you waited for a stronger close and then you put in a limit buy, you could try it that way. But for me, I just like to, at this hour of the day, just to go to the higher time frames and look at those. So on my 5-minute chart, right, I'm not even seeing anything really on this 5-minute chart that's like making me think bounce time, right? So as you all know, like what I'm looking for, right? When I'm looking for, like, this basically is going to be some type of a reversal trade, right? I'm looking for, I mean, there's no doubt. I mean, look at this. There's no doubt that this has been a very, very bearish day here for Amazon, right? So, I mean, look at on the 15-minute chart. I mean, I got to scroll back. I mean, look at it. Just boom. I mean, talk about the S curve, right? Beautiful S curve. Down, up, down, right? Perfect S curve. But at the same time, right, there's going to be certain indications and certain times when I'm going to be looking for a bounce at this location. And I already touched on the fact that it's sitting right on top of that weekly 100. So that is something that makes me think potential bounce area. But in terms of like setting this up, right, let me just walk you through a couple of things that I looked at. So again, 5-minute chart here, 30-minute chart. Okay. And what I want you to focus on is not just the setup itself. Okay, great. I see a hammer. Should I take that? Should I take that candle? Right? Should I take that setup? There's also your reward to risk that you need to consider. Right? Do I have enough room here to make it worth my while? Meaning, is there enough potential reward to make it worth the risk? So again, for my trading plan, I need a minimum of 1.2 to 1.4 R reward to risk to make it to fit my trading plan. So here's what I looked at. Okay, this is basically the setup I put together. Right. So using the 15-minute chart again, because I don't really see much here on the 5-minute chart. And so I really want to use this 15-minute chart here. So my entry would be above this hammer. And again, I'm also not seeing great, again, what I'm looking for in terms of at the bottom of a move, I'm looking for a bounce, some type of hammer candle with a volume spike. Okay, great. So I do get some volume spikes here, right? Bottom of the move here, right? I'm getting some volume spikes, but I'm also not getting, what I would love to see here is the 5-minute being in alignment with the 15-minute, meaning I'd love to be able to look at this and see a 5-minute hammer with a volume spike, a 15-minute candle with a volume spike, right? So decent volume here, right? No doubt. And when, right? Check this out. I mean, this is what Wynn turned me on to, which, I love, because when I talk about this hammer candle, right here, right? People go, well, it's bearish. Well, technically, yeah, it's a red candle, so it's bearish, but that's a bullish candle. If you think about the sentiment of the candle, forget about whether it's red or green, white or black. That is a bullish candle. Right? Look at the buying pressure down here. That wick. At one point, this was a pretty big bearish candle, and all the bulls stepped in and go, no, we're not going to let it go lower. And they bought it up. Right now, this is what Wynn turned me on to, these advanced volume bars, which I'm playing around with. And when I know that I've mentioned, I want to set up a call with you just to pick your brain a little bit about it, since you've got the experience with it. So, but look here, right? Yeah, it's a bearish candle because of the color, but the advanced volume bar here shows you the relationship of the bullish, right? The buying and the selling. And you can clearly see that the buying was much greater than the selling on the volume, right? So the green is the buying, the red is the selling. Well, that makes sense, right? Because this is a long wick that represents buying pressure. So again, when I say that that's a bullish candle, it's a bullish candle because that took a lot of buying pressure to make it close like that, right? So even though it is a red candle, technically speaking. Technically speaking, that goes down as bearish candle, but it's bullish in my book, right? So then I look, okay, well, what's my target? If I'm going to get into this trade, right? My entry right here. So the high of this candle, 126.08. So entry would be 126.11 for me, right? So again, for me, I never go a penny above. I'm typically 3 cents above, on like anything under, let's say, $150. And then you get into the Teslas and the Nvidias, and I might even be 5 to 10 cents, right? So I'm never going directly above, because that's pretty obvious and it's easy to get triggered into a trade and then just have it reverse on you if you're just a penny off, right? Especially you got to look at the bid-ask spread as well. So the question then, I go, okay, here's my setup, but what's my target, right? Where, and especially at, with less than an hour to go in the day, what's going to be my target? So when I looked at this, I'm like, so here's my target, right? I can color code this for you. If I was getting into this trade, that's got to be my target right there, right? People go, well, it's not the high of the day. Look, let's be realistic. Is Amazon getting back to the high of the day today? No. I'll buy all of you dinner if it does, okay? But it's not getting back to the high of the day. So realistically, where is Amazon going to get to if it bounces here, right? If it bounces. So what I'm looking at here is that when Amazon came down, and again, beautiful S-curve, and you can see this S-curve on the 5-minute chart, you can see it on the 15-minute chart, it's clear as day, right? Price comes down, it goes up, it goes down. Beautiful, right? This level that caused the S-curve, right? Which is basically the support level where it came down and it found support and it gave a little bounce and it came up and then it rolled over. So in order for that S-curve to be completed, it's got to break this low level of support. You can come down, when price came down here, and again, I'm looking at it on the 15-minute chart here. When price came down here and this lower wick came down and it bounced and it came up, came right back down, came right back down that level. I'm curious. Low of that 126.72, low of that 126.76. So pretty close. Okay. Went a little bit lower. This next candle, 126.75. So anyway, it's a range somewhere between 170, 126. Let's see, somewhere between 126.70 and 126.75, somewhere in there, right? But you can clearly see that that was that level of support, because it tried to bounce here, came back down, hit it again, then it bounced, right? Now, come back up here and you do get a nice looking hammer here, right? But again, like it's, today, okay? Today was an interesting day. Quick little, I'll just ask the group. How many trades, and there's no right or wrong reason here, just throw out guesses. How many trades do you think I took today? Adam says 2, Win says 1, Al says 0. Al's the winner. Al's the winner. I took 0 trades. I sat on my hands. I did nothing because, first of all, almost everything I was looking at was an inside day, meaning, so you just switch this up real quick for a second. Amazon was not an inside day, by the way, but let's look at like Nvidia. I'll go back to Amazon here in a second. Right? Inside day. Yeah, it broke above, but for the most part, it's been an inside day. Price is inside yesterday's price action. Tesla. Inside day. Yeah, broke above, but it went right back down, right? I associate inside days with a lot of chop. So when I'm looking at trading, I'm going to be very aware when there's inside days, and because you can just get chopped up all the day, right? Nothing's going to be trending except for Amazon in this case. It's going to be hard to get into, and even like Amazon would have been brutal to try to get into this trade right off the bat, right? If you look at Amazon, right? 3 minute chart, right? Unless you took the break of this, which again, I didn't see anything at this point that really would have shown me, all right, take the break below that. I don't know. But once this happened, this waterfall, where are you getting in, right? You're not. You just got to let it run. I'm not going to chase that, right? Unless I did see something up in here. And again, I'm not really seeing in these 4 candles right here. I'm not really seeing anything that gives me an indication. And look, the volume down here, right? There's nothing that is screaming, go short right here, right? I would have just been watching to see what this did. But as soon as this happened, boom, it's just gone, right? And then you just let it go. There's nothing you can do. So anyway, so today was a day where I literally just sat on my hands because there was just so much chop. I didn't want to get caught up in it. So I was like, and I'm okay with that, right? I'm not going to let fear of missing out get the best of me. I'm going to control my FOMO. I'm going to control my emotions and just watch the markets, right? And it's interesting because I did pick up on a few things that I want to go over and talk about. But if we go back to this Amazon trade, again, just to get you to understand where my target would be on this, right? So again, price came down here and, look at this candle right here. When after this, when it came back down here and you start, right, no lower wick here, but then you start to see a little bit of lower wick, right? Then here's basically a hammer candle right off that level, right? This was the support. This is what had to break for it to roll again. And it did, right? With this big candle right here, right? That was it. Nice break right there. And then it's off to the races again. Okay. So if I'm getting into a trade, that previous support, which is now resistance, has to be where I target. Okay. Why? Well, because this is where the bulls got involved, right? We can see here clearly that for the first 15, 30, 45 minutes plus, right? That was all just nothing but bears, right? Bulls finally got in here and we're like, all right, let's see what we can do here. And they attempted it, right? And it bounced. And then clearly they got in again right here, right? And then they all just stepped away and walked away. So this level right here, which was the key battleground, right? After the big bearish initial move, this was the big battleground right here, right? And then that's when, the bulls gave one final shot and then just, stepped aside and boom, it just dropped again. Okay. So if it is going to bounce, that's got to be my realistic target, right? Because if price comes back up in here, right? So think about, right? You just got to think about what happened right here. Well, what happened right here was the bears won a big battle, right? The bears had their way all through the first 45 minutes. Then the bulls stepped in, they did what they could. And then right here, this was this line, right? This was that line that was holding. And the bears won that, right? Price just goes right through it, comes all the way down. So if we do get a bounce here, right, and it comes up, what do you think is going to happen at this level right here? Well, that was the level that the bears won. They're not going to give that up, right? Yeah, when saying rejection. Yeah, that is going to be a spot where the bears are going to fight and defend their territory, right? Because they won this battle, right? This was the battleground. They won it. If it comes back up here, they're going to defend that, right? They're not giving back that area, or they're not going to freely give it back, right? They're going to put up a fight. So that's where I have to make my target if I'm going to get into the trade, which obviously I'm not getting into. But that would have been it. So then I have to go, okay, well, is that meeting my trading plan? Meaning, I had said previously, my trading plan says I need to see a minimum of 1.2 to 1.4 reward to risk. Well, it's pretty close, right? If I draw this trend line right here, just just to have some type of a reference, that's 1R. If I bring that up here, might be 1.2, right? I think it is, at least to the eyeball test. So, okay, yeah, I could take that, right? I could take that. But again, I'm going to be very aware of that level. Now, does that mean I need to take everything off at that level? Well, I could, right? And especially given the time of day, I probably would. I shouldn't say probably would. I definitely would. Given the time of day, if this did trigger at 3 o'clock, 3:05, 3:10 or whatever, if I only had 45 minutes, yeah, for sure, I'm taking all at that level. I'm going to turn a day trade into an overnight hold, right? I'm out by 4 o'clock. I'm out before 4 o'clock. And if you're trading the funded account, you're out by 3:45, right? No, I'm sorry, that's only on Fridays, I think. Either way, I am out at that level if it hits it, right? Now, granted, here's a pretty good example of how the higher time frames are going to save you from getting into a trade, right? This was my setup. My setup would not have triggered, right? And now it's below my stop. So this trade is off anyway, right? I'm not taking it. Give me 1 second. I'm just going to get a drink of water. So anyway, trade's down below my setup anyway, my stop. So this trade's off. I'm not going to be taking it. But you can see how the higher time frames, right? By deferring to the higher time frame here, how that kept me out of a trade, right? Versus getting in, again, everyone has to trade their plan, right? So Johnny's plan allows him to trade on the 3-minute chart at this time, right? But that's his trading plan. I have a slightly different trading plan. That's okay. That's what makes us unique in individual traders. All right, so let me get rid of some of these lines because that clearly is not going to be a trade that I'm looking to take. But let's just because we haven't done it yet, 1445. Adam, I'll go right there in a second. Let me just go into here, right? So again, at that same time that I was looking at the 15-minute hammer, right, on the chart, right? If I come in here on the 30-minute and the 1 hour, right, I'm not seeing what I really would have wanted, right, would have been for this to have closed at its 30-minute mark. Like if price had been able to bounce around a little bit and this close, a 30-minute close with a hammer, great. Now I've got the 15-minute candle and the 30-minute candle, both with hammers, even better. But it didn't, right? It's just not. So anyway, this is a pretty good example of, especially at this time of day, letting the higher time frames help you make your decisions. They will help you, either confirm a trade that you want to take is a good trade to take, or in this case, they're going to keep you out of a trade, right? So let's take a look at the cues for Adam. Now, Adam, real quick, are you thinking the reason you want me to check on the cues? You think about a potential day trade? Or are you just looking at my general thoughts? I have puts on it, thinking about closing them now. You know what? I'll tell you what, Adam, let's go to start. Okay, to start with. If I'm going to look at the cues, I'm first going to look at the broader markets. Right? The NASDAQ. Because the cues are nothing more than a reflection of the NASDAQ, right? So here's what you got to be looking at, Adam. And I'm not sure. Yeah. So here's what you need to be thinking about is on the NASDAQ here, right? And let me go into, right? We are right into this. We're getting into this area, right? Right into here. So this was an area that we previous, resistance that we actually gapped through, right? So now we're coming back and actually we closed the gap here, right? But we got a pretty good bounce here. So, yeah, this is definitely a level where you could see a bounce, right? And here's my thought. So Adam, well, first of all, how many contracts do you have? 5. Okay. So, here's the deal, right? I assume that you're profitable on them. I don't know when you got them, but yeah. So the question is, do you close? Let's say, do you close out 3 of them and hold 2, right? See if we can go lower. The thing here, like this is definitely clearly an area that we bounced before, right? And if you look here, so not just at the level, right? This is where we got a hammer. Now, we're definitely not heading into that level with a hammer right now, right? But then also, if you look here down at the RSI, we're basically hitting, again, you think of RSI, look at the same way you do, a stock chart in terms of support resistance, right? I mean, so you're coming down into an area right here where we bounced previously, which was here. So RSI, and it's pretty equal, right? It's not like the RSI is up here right now, right? So it is approaching the oversold area and definitely approaching this area here where we bounced, right? So, again, I can't necessarily give you trading advice, okay? So I'm not a licensed, registered, financial, analyst and all that, right? So got to just throw out that disclaimer, right? So I can't tell you what to do. I can tell you what I would do, which is I would probably, if I had, well, before I even tell you what I would do, here's my thought process, right? I've already shared with you, I would be looking at this as potential bounce, right? Now, when I look, and I'm going to show you a really good example, right? And I don't know. So when are your puts expiring? How much time do you have left? Oh, 3 days, right? So here, okay, right? So that's helpful, right? So 3 days, theta is going to be working against you. Okay. Yeah. Okay. Because here's what I was going to say that I would expect to happen tomorrow. Okay. Is now you're going to hold overnight. Now you got 2 days, right? See this candle right here? Right? Anytime that there is a big candle like this, like we're getting today, like we got right here, right? The next day, especially if this closes like as a shaved bottom or very close to a shaved bottom, I'm expecting the next day a 30 to 50% retracement. Yeah. So we're thinking the same thing, right? I'm thinking that tomorrow we open and we get a bounce here somewhere to the 30 to 50% range. And that doesn't mean we roll over and go lower tomorrow, right? We might just get this kind of bounce just like we did here, right? And if you only have 2 days left, again, this is just how I would be processing and thinking, right? Again, because I can't tell you what to do. I can just tell you what I would do, which is I probably would just, if I'm nicely, in profit with this, I'd probably just close them, especially with only a couple days remaining, right? Now, if you said you've got next Fridays, right? Okay, it might be a little bit different because you've got some more time. But yeah, if you're talking this Friday's expiration and you got theta accelerating, right? Yeah, dude, and this is a great, right? Great move here. Right. I'm not sure when you bought them, but I mean, hey, you're never going to regret taking profit, right? Yeah, reposition again. And I do think just based on where all this is happening, right? I do think that we get a bounce. Again, I could be wrong. I'm just telling you from experience, like whenever I see big candles like this, right? I do expect some type of a bounce the next day, right? Granted, we didn't get it here, right? Didn't get it, but also here we weren't coming into a very obvious level of support. So anyway, that's my take again, but you do you, trade your plan. Yeah, I mean, happy to help and offer my thoughts, right? Just from one retail trader to another. All right, so let's take a look at a couple things, right? So let me show you why I was sitting on my hands a lot today, okay? So let's go to NVIDIA. So NVIDIA, as I already mentioned, inside day for the better part of the day. Granted, we went a little bit higher today, but for the most part, we've been trading inside yesterday's, right? And so what do? You get a lot of chop, right? Just like yesterday, right? Yesterday, a lot of yesterday's price action was inside the previous day. A lot of chop, right? Just getting a lot, and it's hard to trade. Now, that said, if I dive in here, I go, so, and especially like when I look at this in hindsight, I go, okay, well, but there was a really nice hammer here, right? Really nice hammer. But I also go back and I look at it and I go, well, again, I'm looking for these volume spikes to help verify. Like ideally, and I said hammer, I meant shooting star. When I am looking for these moves, I want to see the volume spike at the top of the move, at the bottom of the move, in conjunction with that shooting star or some type of a hammer. And yeah, so Wynn is saying it was all algos today, totally brutal. Yep. So when I look at this and I go, okay, well, I go back, I go, well, let's just analyze some of this price action, right? That's what we're doing here. We're analyzing, volume and price action. And if I look at this, I go, okay, well, there was a volume spike right here, right? But then all it did here, this volume spike would have been beautiful had this been a shooting star, some type of a reversal signal, but it wasn't, right? I mean, yeah, there's a little bit of a wick up top here, but for the most part, I mean, that's a pretty strong bullish candle, right? And all we got out of it was just, a 3-bar, whatever you want to call that, a flag, right? 3-bar pullback, and boom, it made its next move, right? Now, when you look at this, you could go, okay, well, what if I did, some wave counts, right? Could this be a 1, a 2, 3, 4, 5, or could that have been a 1, 2, 3, 4, 5, right? Maybe that's it. Maybe this was the 1, 2, 3, 4, 5, and then you look for the roll, right? Great. Yeah. I mean, you can apply the Elliott wave to it, right? But again, it is very subjective, right? Everyone kind of can see things a little bit different. But then when this shooting star came in, right? Again, okay, a little bit of a volume spike, right? And this happened at 10:45. 10:45, right? But with a lot of bullish, push here, and then you get this volume spike. But again, I mean, yeah, it's a little, I mean, compared to the previous two candles, yes, there was a volume spike, but not greater than that one. Certainly not greater than this one, right? So I did see this shooting star, but I didn't see the volume I wanted. So let's just go 10:45 if we go into the higher time frames. Right. So yeah, I saw it here, and that looks a little bit better, right? You get this volume spike with this. No, I'm sorry, that's actually was back here, this volume spike, right? On this one here, right? Volume is dropping off. Right. So I didn't see the volume spike. Again, what I'm looking for is I want to see the volume spike along with that shooting star, right? I want to be convinced that that is some type of exhaustion selling and buying, right? Well, this would have been exhaustion buying here, right? Then when you finally get the shooting star. But then at this point here, 10:45, if I go over into the 15-minute chart, right? Well, this candle closed at 10:45, right? This wasn't looking weak to me at this point, right? That's looking, I mean, this candle, which started at 10:30 and closed at 10:45, that's looking pretty bullish, right? So therefore, I can't, and granted, it would have worked out, right? But I'm looking for those setups, those trades that are giving me the highest probability of success, right? Obviously, you can look back and go, yeah, but it worked, right? But then again, I go, okay, but how would I have traded this, right? So unless I took the breakdown, which, as you all know, 9.9 times out of 10, I don't take. I took one. Last one I took was on Friday. I took that breakout, but unless you actually took this breakdown here, right, and some entry here, stop up here, right, I wouldn't have gotten it in. I would not have gotten into the trade because here's my confirmation candle, right, and at that point, this would have become a limit sell, right? So instead of doing a stop limit, this would have been a limit sell. Price didn't come back up to it, right? And I'm not gonna go with a lower entry, right? This is it. So if I get this kind of confirmation, and if I see it that big, I'm thinking it's not going to come back up there, right? So I would have, even if I had waited and saw this and then thought, but again, at that point, this was not after when this candle formed here, right? This was still looking very bullish, right? And then when this one came in, it was just too late, right? There was no way for me to catch this trade at that point, right? Because I wasn't going to take the breakdown of this. I wasn't going to take that on its own off a 5-minute chart when I saw this on the 15-minute chart. Now, again, would the trade have worked? Yeah, it would have. But I'm okay missing out on a trade that doesn't meet my trading plan, meaning I didn't see what I wanted to see in terms of the volume spike, it being visible in the 5-minute chart, the 15-minute chart, 30-minute chart, right? So I'm okay missing trades and just focusing on the ones that give me the highest probability of success. Again, I can look back on this one and go, well, the trade would have worked. Yeah, it would have worked, but I'm okay missing it, right? I'm not gonna cry about the fact that I missed that trade. And if you had played that shooting star off the 5-minute chart, would have worked great, right? You could have gotten into the trade. This would have triggered you in, and then it came up, and when it rolled down here and closed below this level, I would have definitely moved my stop down probably around here, right? Cut it down. Even that would be less than a half R loss if it came back up. And then at this point here, right, you could just start using that 5-minute 2-bar trailing stop, right? So as this candle comes in, right, count back 2, 1, 2. Now your stop is here, and you're already in the money, right? You're already better than break even. Pressure's off you. And I mean, when these kinds of moves happen, it's just so easy just to use that stop placement. Now, granted, on this one, back 2, 1, 2, my stop would have been, again, I never go right above. So that was 69, probably 79, 80. What was the high of this? Yeah, would have been close. That was high 74. So if I had 79, right, if I went 10 cents above, right, that would have kept me in. If you were using that 2-bar trailing stop method that I've been talking about, that actually would have kept you in, right? Would have been very close. Maybe if you were in the funded account, probably would have gotten taken out, right? Because let's say again, if the high of this one was 423.69 and I put my stop at 79, 10 cents above that, right? And even again, at this point, I'm probably 20 cents above, right? On this type of a higher priced stock, right? Nvidia, Tesla, I'm gonna be even looser with my stops, right? So 10 cents, I might use that for like a 10-cent stop on AMD or Amazon, but something like this, probably more like 20. So this actually is a pretty good example of how that 2-bar trailing stop would keep you into the trade, right? My stop actually would have been above. Now, the only question then is like, okay, well, funded account, right? Those of you who have had this experience know that sometimes with the funded account, you can actually have your stop hit because of the bid-ask spread, even when price doesn't hit your stop, right? If anyone here is trading the funded account, I'm sure you've experienced that. It's happened to me many times, which is how I learned to be even looser with my stops when it comes to trading the funded account, because that bid-ask spread that say, if my stop was up here at 423.91 and price got up to 423.88 and there was a 10-cent spread, bid-ask spread, chances are that would trigger my stop, right? So you just have to be aware of that if you're trading the funded account. But anyway, let's say this, if I had gotten in and here was my stop, well, this came up, and then next time I would have been able to lower my stop again, because I would have had to get what was the low of this one? Low 420.73, low of this. So this candle right here and the high 422.34. So same high, right? So I really probably would have only been able to move my stop once this candle or this candle came in, right? Because again, my stop placement after this candle would have been back here above this one, right? And then price comes back up. It's got to roll down. Now I need to get a lower low and a lower high compared to basically these candles here. That happens on this one, right? Count back 2, 1, 2. My stop is here. Next candle, lower low. Yep, lower high. Yes. Count back 2, 1, 2. Now my stop is probably somewhere here, right? I would have moved it from here to here, but still, that's a nice, nice way to move the stop. I mean, that's definitely getting you locked in at like maybe 1.5 R, right here. If that is your 1 R right here, just visual test, I think that's about a 1.5 right here. So you would not have had another opportunity to move your stop because it would have come back up here, right? If you were using that 2-bar, 5-minute 2-bar trailing stop method, it would have taken you out of the trade right about here. But still, again, if you had caught that, again, which I didn't because it didn't meet my trading plan, but that would have, definitely could have locked in at least 1.5 on that. But again, like ideally, when I say that my minimum, right? So when I'm setting up a trade, ideally what I would like to see is at least 2R to my target. And when I say a minimum of 1.2, 1.4, that's kind of my minimum to be able to take the trade. And then at that point, like when I'm evaluating the trade, I'm like, okay, well, it's definitely not an A setup, right? If I'm only looking that I can get 1.2 to 1.4, it's definitely not like an A setup, right? Might be like a B minus, C. But that's okay. Again, but ideally what I would want to see is like a 2R, a way to make 2R on a certain trade, right? So you could have locked in 1.5 here just using that trailing stop, had you just played that shooting star. But again, for me, it wasn't setting up here on the 15-minute chart or the 30-minute chart. So it didn't work for me. Get some of these lines out of here. Just curious. Let's go back. Just want to take a quick peek at Amazon because we're only a few minutes before the market. Yeah, so this would have just, yeah. Yeah, so it's fine down here, right? Now, here's, again, the market is about to close, right? So this doesn't count, but, here's a pretty good look, right? Is getting that hammer right down here, with volume, right? Bottom of a move. That's what I'm looking for, but it's just, obviously too late in the day. Let's see. Adam says buying some calls on the Qs. Looks like Robert is selling puts here too. Likely looking for that 30. Yeah. I do think we're probably going to get that, some type of a bounce like that. Let me just go, since we did just look at the NASDAQ, but let's just actually take a look at the Qs. Again, I always defer to yeah, because see, this gives you a little different perspective, right? So the Qs on the daily, right, is the Qs on the daily gives you a different look than the NASDAQ, right? Which is kind of like why I like to use the NASDAQ, since again, the Qs don't exist without the NASDAQ, right? So I prefer to look at the NASDAQ because if you were just using, like, let's say you were just using this chart here, right? You would look at this, go, oh, well, look, I mean, this support level here, right? It's completely just getting crushed. And then you go and you look at the NASDAQ. And you go, well, actually, that support level isn't getting crushed, right? It's right there. So just something for those of you who aren't watching the S&P or the NASDAQ in addition to the SPY and the Qs, again, because just keep in mind, SPY doesn't exist without the S&P, the Qs don't exist without the NASDAQ, right? And a lot of times, and I've noticed this with day trading, right? Sometimes I will be looking at, pre-market, and the SPY and the Qs will be looking like they're gapping, right? Sometimes it looks like a nice gap, but then when you look at it on the S&P or the NASDAQ, and you go, it's not gapping, right? And again, how's the market going to react? Is the market going to be driven, when I say the market, are the institutional traders going to be driven by the SPY and the Qs, or are they going to be driven by the S&P and the NASDAQ, right? So just watch that, right? And if you're currently not watching the S&P and the NASDAQ, I would highly recommend that you start comparing that, especially in the morning, right? Compare it pre-market to the SPY and the Qs, and see if sometimes you see that there's a disconnect where the SPY and the Qs look like they're going to gap up or gap down, but then when you look at the NASDAQ, you look at the S&P, and it doesn't have that look, right? And so people will be like, oh, it's gonna be a great gap, and it ends up not gapping at all, or it just ends up chopping because the broader markets are actually trading inside, they're not gapping. So let's just see. So Adam was saying something about 1 hour. Let's check that out. Yeah, look at this. Right. So here's what Adam is pointing out here again on the NASDAQ. Right. So this final hour here of the trading day right here, really nice looking hammer, right? Decent volume. So yeah, I'm thinking that we do get some type of a bounce. I mean, it would make sense, right? We're in that area, we're in that location. Be interesting just to watch it tomorrow, right? See what happens. But again, Adam, I don't think you're going to be upset with taking profit on some puts, right? Locking the profit versus holding for overnight exposure. Yeah. Yeah. Good deal. Yeah. Overnight exposure, right? You never know what's going to happen, right? But you have the money that you can put in your pocket today, right now. Let's see. I'm going to go to Tesla. Was another one that I was looking at. That again, right? I was seeing some nice setups on, but just not getting all those. So again, when I talk about like, okay, yeah, I saw these setups, but I've got this, whether I have a mental checklist of what I'm looking for or a physical list of like right sitting by my desk, like going, okay, is there a shooting star? Yep, check. Is there a volume spike with that shooting star? Nope. Okay. Can't check off that box. Is the 15-minute, 30-minute charts in alignment with the 5-minute chart? So again, just kind of like with what we saw with NVIDIA, right? This was happening at 10:45. Well, when this candle closed at 10:45, it's looking pretty bullish, right? So, I'm trying to check off as many boxes as I can. And if I can't check them all off, right, or most of them, I'm just going to pass on the trade. Again, would this trade have worked? Yeah, it would have, but you would have had to hold through this whole retracement, right? Right here, right? If you did take this, if you took that breakdown of that shooting star, but again, it wasn't for me. I wasn't able to take it because I didn't have that volume. Yeah, there was volume picked up more than the previous candle, but not greater than these two candles, right? Volume was high, it dropped a little bit, picked up, but what I'm looking for is like, volume is like kind of dropping off. It's even getting lower, and then you get this great looking volume spike, right? It would have been like right here, right? If volume was like this, like this, like this, and then all of a sudden here, boom, and you get a big volume spike, right? Well, maybe not that high, but up into here, right? That's going to be what will catch my eye, right? Again, this wasn't happening at the bottom of the move. Ideally, I want to see the hammers at the bottom of a move, and the shooting stars at the top of a move. Would I've caught this? Again, my only way to have caught this trade, and I didn't take it because it wasn't meeting my plan here. Again, here's the 15-minute chart, right? Looking very bullish there at 10:45. If you go into the 30-minute chart, 10:45 at 10, this started at 10:30, right? It closed at 11. At 10:45, this was probably up in here, right? So at that moment in time, it wasn't looking bearish. So I wasn't seeing those signs of reversal. Now, when you come over here, right, and you look at, now we're into a 1 hour chart, right? Okay, well, here's that shooting star, right? And it's got decent volume, right? That's on a 1 hour chart, right? What I want to see is I want that I want to see the setup happening on the 5-minute, but then I want to see it being enforced or reinforced on those higher time frames. But back to this one, if you'd taken this, right, you would have, yes, it would have gone your way initially, but then you would have had to hold through, this retracement. And at this point, right, I mean, think about realistically, right? It comes out, this is like a great example of, how a winning trade turns into a losing trade. Because if you had, let's say you've taken this breakdown, right? Let's say this was like your setup, right? First of all, my target, if I took that, would have had to be like right here, right? So it looks like I could have gotten like about my minimum, my 1.2, 1.4, right? But you go, okay, well, then this candle comes in, it was finally this candle here where, I would have been comfortable moving my stop. And yeah, I wouldn't have gone to break even. Maybe my stop would have been here, right? But you would have had to hold through all this retracement, right? Coming right back up. And even let's say it hit there and then it rolled, right? Then now you're letting a winning trade turn into a losing trade, right? Just by nature of not really having a great opportunity to move your stop, right? But again, for me, what keeps me out of those trades is, things like this where I'm, not seeing it confirmed on the higher time frames. Let's see. I just saw. All right, I'm going to go ahead and stop the recording now. I got Yates coming on in a minute. I think it's Yates is doing it, coming on at 4. But let me go ahead and stop the recording.